It's the pre-market ritual you never knew you needed. Get ready to gap and go with the Calum Trading Institute.
Welcome, guys, to another episode of Gap and Go. A lot of things happening. And I really believe that the narrative in the markets have shifted a bit, right? Um, from this stagflation, now we're trying to tilt that, I don't know, that weighing scale from stagflation into, inflation is actually coming down, and now we're going to be printing money. And for the first time in a long time, your dollar and your bond yields actually have been moving in the same direction, usually indicating quantitative easing is on the corner. So I wanted to get everybody's thoughts first before we get into some of the charts and some of the data that we're seeing. Jason, maybe you can start.
Well, I have to agree, no? Parang may bagong narrative going on di ba? Kasi as Edwin said, kasi before stagflation yung worry, di ba? So when the dollar was going down, bond yields were actually going up, di ba? But now they're trading in the same direction. So I think, and if you also look at the Fed fund futures, I think it has swung a little bit. I mean, we're back to the market betting on more rate cuts, di ba? So after pausing for the past few meetings, the market's betting that by September, 78%, 72% probability of, resumption of the rate cut cycle. And by end of the year, may isa pang 25 basis points. Diba? So, yeah. Okay, so other stuff happening, actually, ang dami. I mean, you have the big, beautiful bill passing, I think yesterday. You have the 90-day pause on the trade wars. I think that's next week, no? Next week. So I think that could be another thing we have to watch out for. Diba? Kasi sabi ni Trump before, 90 deals in 90 days. I think they've only done like one or two. So what's gonna happen there?
And one of the things that, Fed Chairman Powell said, I'm not sure if it was yesterday or the other day, we would have rate cut if it wasn't for the uncertainty with regards to tariff inflation. So I think if you break down the select inflation, you're actually starting to see deflation happen in subcategories already. And it's nothing wrong. What I always tell people, it's just we're coming from a very high base. And that's the reason why I use the word disinflation more than deflation, because it just gone up too much over the last 4 years. Now you're starting to see some leveling or slowdown, and it's nothing wrong. It just means that everything is just too expensive across the board. And one thing that has been carrying inflation data, especially in the US versus the rest of the world, has been rent. So we know that housing actually has been in a recession the last few years, obviously, because mortgage rates are high. Nobody wants to be buying a house at high interest rates, right? And so what that has happened is that it has created a huge glut. Undersupply, wrong word. Undersupply in terms of housing. Now rent actually for some odd reason gone up a lot, and now that's the main reason why inflation has been very high in the United States. So they always talk about service inflation, and indirectly, it's actually mostly because of rent.
Okay. Actually, I have some more perspective about the housing market. I think it's also because of the COVID stimulus eh. Yun yung nabasa ko eh. Diba? So the COVID stimulus gave consumers like 2 trillion of savings eh. Diba? So that what happened there was that they became price insensitive. They don't care what the price is. And I think this also translates in the housing market and rent eh. Right? So now that those 2 trillion is already depleted, and I think what's also happening is that the higher rates are kicking in kasi parang they have to refinance or things like that. Diba? And I think that's depressing the housing market. I think first time for the past few months, the housing prices are also declining. And on the inflation front, kasi medyo magulo. Some say, okay, stagflation, tariff is inflationary. But I think you have to differentiate between goods and services also. I think the basket is tilted more towards services ata eh.
Yes,
Diba?
because of wages and rent.
Oo. So yeah, on balance, I think that's what the market is saying, no? That's why the cuts are being priced in.
Okay, let's get straight into it. A lot of interesting stuff. Let me just start here. Okay. Dollar, this has surprised a bit in a way. Because I really believe that the narrative started shifting maybe in this area where coinciding with the dollar, similarly, this has happened, right?
Yeah.
So, I'm pointing it out because normally in inflationary environments, normally you have a strong dollar and then a weak bond yields. Now, first time you're seeing both of them move in the same direction, and I think that's the main reason why, because expectations now for QE are happening. That's the reason why you're seeing, and I tell everyone, this is what you guys should expect. Channel then explosion higher on your
Yeah.
S&P, on your led by your NYFANG. And we all know that it's going to be a winner take all, right? Um, just look at your MM, sorry, MMTH and the ones that are above 200 day. In fact, only 50% of companies are above the 200 day.
Yeah.
Not even the 20 day, it's 200 day. That means the
Yeah.
breadth actually isn't that broad across the board. You can talk about the banks, obviously doing well, your financial sector doing well. Most of the things led by your S&P and your NYFANG leading the way. So it's not anything. It's just because markets have been so efficient that at the end of the day, we have $60 billion coming to the equity market in inflows every single month. And what do I buy? And the answer is the big tech. And that's exactly why everything has been skyrocketing into new high territory. Although we've seen some rotation happen, and Brian, maybe you can talk about it also. Um, so you've had your LIDAR stocks, for example, even outperforming, although they had a big retracement yesterday last night. Then you had your nuclear also outperforming and severely overbought across the board. Brian, anything else?
Yeah, SMRs, yung mga small modular reactors are all experiencing a major correction. Well, they've been going up for the past months. As you said, it's moving from here to more speculative ones like your battery companies, yung mga QS, diba? Very speculative. What else? AMPX, those battery companies. Kasi batteries are apparently AMPX battery apparently are needed for AI training. AMPX. So this one is the same sector as your ENVX. So money is flowing into those informed spec issues from your not so informed spec, as we say, yung as we said a while ago, yung mga quantum kasi is experiencing duration also, and your CEG and VST, diba? So it moved to also to mga eVTOL, yung mga Joby, JOBY.
Helicopter.
Mga helicopter. So yeah, I think it's the stage of this rally. So from the 20% correction to now nearing new highs. So what you saw last night, I guess yung mga Mag 7 mo experiencing corrections near all-time highs, which is not to be alarmed about, kasi it's normal. So we just have to see how shallow the move would be.
Yep.
Yeah, just wait the usual.
I think there seems some sort of rotation also, no? IWM was up last night.
For the first time in a long time.
Tapos if you look at yung MMTH, seems like it's went up last night, diba? So
Yeah,
some broadening in participation.
Which looks healthy, right?
From narrow participation to a wider one, really seems promising.
Actually, yeah, if you look at markets around the globe, everything's so active actually.
Hmm. So maybe probably the expectation your, as you explained a while ago, yung low rates.
And that's
And
the
if
reason
you hear
why.
if you hear Besant talking in his recent interviews, aside from bashing Elon Musk, very bullish siya about growth. So he's expecting to parang see rapid growth and surplus for the US if everything goes into place.
Ha,
So that's
no,
one side. That's one ano, 'di ba? Because he's the insider eh. So
well, that's we'll see.
let's see.
And the funny part about the deficit about the US, I was listening to uh I'm not sure if it was Jim Blanco, I think it was on Macro Voices, talking about $2.2 trillion in defense spending. And it's the largest that it's actually gone up in the budget for this year. So whenever they're seeing these things because of higher geopolitical risk, I was also shocked because that's largely the main culprit as to why the US, together with higher interest rates, are sitting at a huge deficit right now as of today.
Yeah. I mean, that's also why, if you look at Trump, he keeps on saying that interest rate should be 1%, right? I mean, ito may chart ako dito eh. If you look at the
Pulling
12-month
power.
interest expenses, 1.2 billion, defense spending 850. So, alam mo talaga gusto nila pababayin yung interest rates eh.
Yep. Okay, some
True
interesting
strength.
parts. Sorry, say Brian?
Peace, peace through strength daw. That's why they need the military.
At the end of the day, we talked about QE, we talked about US about to cut interest rates and expectations of the markets on how many cuts that they're planning. For the first time in a long time, we've starting to see more, I wouldn't say outflow. I would say it's more like spillover effects that are happening to other countries. Um, and there's always so much skepticism. In fact, for the month of June, I didn't get yesterday's data, but early this week, inflows in Asia were actually rose to $6.5 billion month to date in June. Um, and that's a reversal coming from the negative that happened in May, right? So a lot of positive things might be happening. In fact, you look at certain countries, your LatAm outperforming. Hong Kong might not be there, but I'll talk about a select stock that I've seen in Hong Kong, which is related to what Brian was talking about a while ago on batteries. And even on the Philippine peso, parang nandyan na nga lahat eh. And I assume it's because of the weakening of the currency. That's the reason why you're starting to see more participation elsewhere.
Yeah, there's a lot of implications whenever the US equities, especially Nasdaq, is S&P, especially S&P, if it's overbought. Parang those are the moments where fund managers hedge. So that's why I'm very bullish on, aside from emerging markets, very bullish on your treasuries. If you notice the past few days, yung mga TMF, the likes of TMF are going up. Aside from the fact that the expectation of lowering rates, but I read recently, parang I saw a chart that kasi we've been expecting that foreigners are dumping your treasuries, but actually it has gone up pa.
Yes,
The
that's Japan might be selling, but actually it's Europe that's buying a lot.
Yeah, so that's very bullish for treasuries. And also the Doge numbers and the tariff numbers somehow can contribute to the positive side. But again, only because the S&P is overbought. That's why you'll be parang seeing, hindi naman totally outright selling the S&P, but more of hedging. That's why you see these things going up, diba? Other than USA.
Well, we'll see. I'm in the camp where everything is still buy low, sell high. But I don't think we're going to see a runaway in bond yields unless really a recession starts knocking down in the corner. I mean, a harder recession. So
Yeah.
we'll see.
Actually, I think there's doing some sort of quote unquote magic behind the scenes, but anyway, let's not complicate things.
Okay, let's talk about Hong Kong really quick. We talked about valuations. We talked about growth, and we talked about spillover happening. I actually think Hong Kong is actually in the best position as of today. Um, Mainly because, again, you're sitting at the lowest interest rates we've ever seen before in Hong Kong, China. Inflows have started to pick up. I understand that there's plenty of skepticism and national security issues happening from pension funds all over the world why they cannot invest in Hong Kong and in China. But uh, you talked about Tesla and you talked about EV batteries. I'll be honest, like Xiaomi released a car last week, 250,000 units sold in the first 10 minutes. So
Gwapo talaga, gwapo.
I don't know about you guys. I'm really like my problem with Xiaomi, let me just point it out, is because of I'll show it to you guys, right? My issue always with Xiaomi is that the margins are so small. So if you take a look at bottom line, for many of these individuals, they're actually sitting close to 10% net profit margins, right? But what was concerning to me always before was that are they able to increase gross profit margins? So I think this has yet to be remain to be seen, especially as they gain scale. So if you look at GMs of Xiaomi, it's actually what 13, 14%, mababa talaga eh. So I'm still in the camp where are we gonna see a ramp up in gross profit margins? But when everybody is cutting down EV prices left and right, I think this has remained to be seen in the following quarters. And that's the reason why I like this company better. Like what you said, it's the producer of all the batteries. So CATL does around 30% in gross margins, 15% in bottom line. And you can just see, look, from an annual perspective, over the last 4 years from 2021, how they dominated this entire industry. Just look at CATL revenues going from 56 billion in the pandemic to 400 billion as of last year. Although it's down year on year, this was largely because of lower battery prices, but volumes actually were still very strong. So that really did not limit its profitability. That's the reason why profitability still went up 10 times over the last 5 years. Outrageous numbers. And I really think that CATL at the end of the day is still going to be the key main player in the EV battery space. And you'll probably see them supply more to everyone else. I think it's as plain as simple as that. That's the reason why they're outpacing Panasonic, LG, etc., etc.
Yeah, reflects also
Go to the
the
index with a 5% float.
kaya pala malakas copper mo. Tuloy-tuloy lang ang copper. Nagbe-break out.
I think because lithium prices are just too cheap right now. It doesn't make sense to move anywhere else so far. Right? Okay, but that's the thing. Will this translate into better rotation into other tech? We'll see. But some look like they're really ugly, I'll be honest. But others like Xiaomi actually look like they're doing well. So hopefully that spills over to the rest of the Chinese tech. Okay. Anything else? Or
I think
break
yung
up
sa
to?
Hong Kong, positive thing sa
Break up,
Hong Kong,
man.
yung positive thing sa Hong Kong, yung property. Property sector has rallied actually more than 20% from the bottom. It's probably an effect of your rates. Eh, diba?
Anong ticker ulit ng New World?
16.
Still,
Sorry?
16.
1.6. Hindi, 1.6 lang.
Ay, hindi pala.
Ano, it's the same. Mga ano ba? 27 ba yun? Ano yun? Ano? Green? Ano?
Hindi, Galaxy yun eh.
Galaxy.
Baka
I forgot that property.
17.
688.
Names in a long time. That's the reason why.
17688. Diba?
Yeah. Long-term memory bank na yan eh.
Ano isa? Ito, this is maliit lang pero rallies. Ano, wala.
Ano? 6'8"?
688.
Ha.
So from the ultimate low, it's probably up what? 30%. Forgot the other. 83 is the Sinoland. Ayan.
Parang Ayala lang to ah.
Yeah, I think that it's that's why yung segue to the Philippines, in property, any signs of lowering rates, very bullish.
Totoo na ba to?
Laki ng volume.
Rally.
Saan galing ang pera? Hindi ko sasabihin virtual assistant.
I think there may news eh, no? There's a change in zoning laws in Makati,
Okay.
which is important, I think, for Ayala.
I don't know. I think the property sector is still in the doldrums, but I get it. Valuations are cheap and interest rates are coming down, so that might be more than enough to have a sustainable rally in dirt cheap stocks, especially in your property, right? I still like SM Prime among all the other property developers, mainly because of its small segment. Plus the fact that, hopefully we'll start to see the leaders, especially SM and Ayala, continue to break out first, right? I think that's the
Good sign. Oh,
good
GT
sign
Cap.
first. You let the big caps break out first, and then hopefully we start to see more rotation happen everywhere else. And then on the flip side, you're starting to see rotation out of the banks, diba? Because everybody's expecting smaller interest income coming from the deposit base.
Yeah.
It's not a bad sign, but it just means that I think the banks just made too much money the last 3 years.
GT Cap was strong yesterday. Tapos in terms of alpha, what are we seeing?
I think the biggest winner so far has been your REITs over the past 2 weeks because of expectations that bond yields are gonna start falling, right? C-REIT done well. Even Philinvest starting to come alive. MREIT sitting at 52-week new highs. Then you have, of course, RCR also sitting at new high. So I think these are all bode good signs for the market. Hopefully it continues. I'm not sure if we're going to see lease rates start to climb. I think vacancy across the board are still very low. Sorry, vacancy is still very high in certain areas in the metro, but still a wait and see in my opinion.
How about your gambling issues?
Oh, I think it's something we're talking about. Some news yesterday that they're gonna, ban it from online. I don't know. I'm skeptic. I think the money pouring into the online gambling is just too big. So I don't know what's gonna happen. I mean, I'm not a proponent of online gambling. Let me be clear, right? But how the Philippine works, I don't know if they're actually gonna push through about all these things. If they do, then fantastic. I really wish that they do. But knowing them, I don't know. I really don't know. I'm just keeping my expectations low. I don't know if you guys have a different sort of opinion.
Yeah, connected to that is your issue on Globe. Ano ba yun?
And I really think that's the biggest overhang with Globe right now, diba? Funny is just a segue because the goal is to IPO mint, right? Especially in the second half of this year. And it's really being affected by all the news coming from the online gambling through Gcash. But another funny part, um, Hotel 101 falling 70% on IPO day. I think this was not talked about. It actually fell 70%. So from $10, SPAC price fell to 3 the last 2 days. Will this bounce on Hotel 101 property injections? I gotta give it to him. I think marketing genius. When I look at it from the concept, it looks really great. Low capex business model, building everywhere, and then you get to stay anywhere, wherever you choose from Madrid to Niseko to Saudi Arabia to parts of the US and the Philippines. I think the guy's a marketing genius in my opinion. Hopefully, I mean, he was able to pull it off. I really hope for the best for these individuals. Whether it's worth $2.3 billion, that's a different story. All right, last thing, guys. Anything else?
How about your consumer issues?
Oh, that was asked to me yesterday. Because we've started to see impact on consumer issues because of online gambling, right? So you've seen Monde, URC. So it was Monde, URC, and one more. And they were saying that gambling revenues were bigger than all consumer companies as a whole in terms of revenue, which is true because you might not have money to buy a Chicken Joy, but I'm sure you have 10 pesos to put it into a slot machine and get a chance to win 980 million as like the 28-year-old factory worker who won that prize money last week, right? So that's really the dilemma that the consumer is facing today. And that's the reason why I think it's really concerning to see these things because, I mean, if you know somebody that won 980 million, 28-year-old earning minimum wage, wala na. Sure ako mas
May
ganado
pag-asa na, may pag-asa.
pag-asa na, di ba? Wala namang pag-asa ang stock market. At least ito may 0.1% chance mag-ingat. So I don't want to say anything. I don't have too much of a, I always believe that the danger giving people a loaded gun, you will shoot that sometimes even when you don't want to because it's there. So the accessibility and the convenience is just a concern for me, in my opinion. But that's a different story. If I look at it in terms of numbers, in terms of business, the online gambling is just doing too well. All right, are we good? Last thing, guys.
So the verdict is buy everything.
Well, hopefully.
May verdict is binibenta na yung gambling stocks so baka akit na yung consumer stocks.
Ayun na.
Tingin ko mag-bounce nga eh.
It's on trading, short-term trade.
We'll see. So let's just wrap things up. I think we're starting to see more inflows happen to the rest of the world. I think mainly because the narrative in the markets today of stagflation is now shifting a bit to we're going to print more money to get us out of this rut because inflation also is coming down. We talked about Fed chair talking about some comments about they would have cut already if it wasn't for the tariffs. So I think these are all positive signs that what to expect in the next 6 to 12 months. And that is more rate cuts, weaker dollar, and hopefully that translates into higher equity prices and bond prices all over the world. And I think that's the main reason why all of you guys this is the time for us to be working and working hard because the good part is there's still so much skepticism and the breath is not there yet. So I really think that there's going to be plenty of opportunity for the rest of the year heading into 2026. All right. So with that, I will see you guys 2 weeks from now. Have a good day, guys. Bye.